Good morning, everyone. Welcome to Admiral Markets. Sorry for that delay. Somehow, when launching the software, my computer didn't work, and I had to restart my computer. Therefore, the delay. But upon the reboot, the software that we use here was working for myself. So, luckily, that was okay. Sorry for that delay again. We just had those technical problems there. All right. With that said, let's start today's webinar. We're going to take a look at Forex market prices, charts, technical analysis, and all of the above in the upcoming hour or so. First of all, though, we're going to take a look at this PowerPoint explaining the disclaimers. For instance, this material is intended for a global audience. Please take into account that that may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Good. By continuing watching this webinar, you agree with the disclaimer and the content mentioned here. So today we're going to take a look at these steps, basically these checklists, this checklist that we use for trading. We're looking at trend, opportunity, filters, trigger, and entry method. Now the trend line, that is basically the focus of today. That is a tool. Why is it a tool? Because we can put it on the chart but also take it off our chart. When we have something that's permanently on our chart, it's an indicator. That's, in my opinion, at least in the definition I use, the difference between the two. An indicator is always on the charts. A tool is something that we can decide ourselves to put on or off. Trend lines are such a tool that you can decide to put on or off. They're not necessarily there always if you want to do it at least correctly. Moving averages are an indicator because they are usually always on your chart. Of course, you can even choose to put on the moving averages on and off, but you know what I mean. It's if you just have it on, it will be always valid, whereas the tool would need to be changed. All right, a fib is, in my opinion, also a tool because you cannot keep it on forever without changing it. When it has to be changed, then it's a tool, in my opinion. Right? Just as Camarilla is an indicator because you don't have to change anything about it. We just put it on a chart, and it will stay valid after that. So we're going to use this tool to help us define the trend, to help us search for opportunities, to help with filters, to help establish triggers, to help establish entries. The trend line can do all of that. In fact, it can help in all these phases of the checklist prior to entry. Now, of course, once we've entered, or anyone has entered a trade, as a trader, that's not the end of the story. We, of course, have the trade management part to do, and we need to have good trading psychology and discipline to be able to implement the trading plan and the trade management plan as we want to. Take a look at Admiral Markets there. And with that said, let me see. I lost all my preparations because of the fact that, as I said, that I had to reboot my computer quickly. So allow me here some time to go to the risk calendar. Normally I have that prepared. Go to Analytics, go to admiralmarkets.com, go to Analytics, go to Forex Calendar, and we will find out that today there's ADP and FOMC statement, so that always has its potential impact. We have a Bank of Japan press conference. We have some Spanish news coming up throughout the top of the hour. In fact, we have German unemployment rate at an hour from now. Italian monthly unemployment rate, all kind of Euro news throughout the morning. And then the USD, big one on the ADP. CAD GDP is big too. USD GDP, CAD GDP, annualized, and FOMC statement. So a lot of big things coming up, definitely. Now let's head over to our charts. I'm just loading my platform here. As I said, I had to reboot my PC. Here we are. Euro-dollar 50-minute chart. There we are. Yesterday we had a fall. We couldn't break magenta. We couldn't break blue. To be honest, I mean, if you look at the market, there's just little in very few cases do we break nowadays a certain level. It's really very messy. It's very choppy. If you look at the difference between high and low across the currency, the Forex market, there's only 3 pairs that have 100 pips or higher range. That's Euro Yen, Euro Odd, and Pound Yen. Euro Yen has 100, Euro Odd has 130, and Pound Yen 135. The expected volatility high and low of today. Sorry. So that is very tight range, and it's really shows that the market is having very low expectations in regarding highs and lows. That's not good, of course, if you want to catch a few pips out of that. I mean, obviously, if the currency market would only have a 5-pip daily range, there would hardly be any pips to be made. So logically, if the expected ranges of a day are tight, that makes it more difficult. On all, I mean, no matter what type of trader you are, except maybe a scalper. So the euro-dollar 50-minute chart, we had the inability of price to go through that resistance, the blue line, and Magenta, and we had a fair share of downside all the way from about 80 to 138, roughly speaking, 139, 137.97 to be precise. What does that mean? Well, we're close to L3 long, which could definitely be that bouncing spot, according to the Camarilla pivot board indicator, and we have a H4 at 138.52. Are there any trend lines that would support such analysis for us today? Well, not on this 50-minute chart so much. I mean, we had yesterday maybe a good 50-minute break trend line. For instance, this trend line here, or one could even draw a trend line like this, maybe that's a bit more conservative, or one could have drawn maybe a trend line like that. But those were all yesterday breaks. Those could have been traded yesterday. Today, we could have a trend line maybe like this. In that regard, we're trying to push through. But if you look at the moving averages, they're pretty close by. First of all, the long-term moving averages here, but also the H3 short is pretty close. That means there's not much space to the upside here in that regard. Okay. H4 is higher, as you can see, and we would have maybe this space here. The 1-hour chart. Maybe we see something different. There is a trend line like this potentially here that connects these bottoms like this. Something like that. Could be a bouncing spot. We'll have to see in the 1 minute. This hourly candle, from a price action point of view, is let me say it this way, is closed, right? So we know how that hourly candle would look like, and it is engulfing the previous hour. So we got hourly engulfing twins right at that support level. That could be a bounce off that trend line for more upside. So that could be an interesting potential for long right here, right now. Let's take a look from the 4-hour perspective. 4-hour perspective, you can see that this entire box is consolidation. We're pretty close to the bottom of that consolidation, which means, again, we're in a potential bouncing spot. So there are reasons to think that there could be a good long here. It doesn't have to be right now, right here. It depends on how you want to trade it. You can also wait for this 4-hour candle to close and take it upon the close of the 4-hour candle, or upon the retracement of the 4-hour candle. Right? It depends on your own strategy, on what you find interesting to trade, if at all. But there is this bouncing potential. The stop loss would preferably be below 137.85, maybe 137.90, below that level. Target could be all the way up at 139.70 or 140, just below 140 maybe. This is a bounce trade off of a support, horizontal support off a trend line, off a range, at the bottom of a range, for an upside breakout above this blue line here, this resistance blue line. Or let me make it orange, this orange line. Okay, that would be, anticipating the break of that, that would be the target. Other than that, there's really nothing else to say. Yesterday had a very big down day, but doesn't mean that we cannot have a bounce today. At least maybe to retrace part of that down day Of course, the more we get higher, the higher we get, the closer we get to yesterday's high and that high of Monday. In that matter, you can see that yesterday's high was unable to break Monday's high. It was exactly equal to each other. That's why those highs and lows are so important. The daily highs and lows, I mean, because if you look at across the currency pair here, how many zones do you see where the daily lows and the daily highs are roughly equal to each other? A lot, right? So it just shows how often those highs and lows act as a support level or resistance level. These boxes all indicate rough indications of highs and lows being equal to each other many times. So it's an obvious, very important level, not only for intraday trading and scalping, but maybe even for hourly swing trading. Alrighty, so with that said, back to the 50-minute world. And that's the risk here. It's still in a downtrend on the 50-minute chart, so it's early to anticipate a bounce from a 50-minute perspective. From a higher time frames, we can see a potential for bounce. Will it happen? We don't know. We never know. It could be a decent bouncing spot, but we're not sure. If it is, then you could also wait for an uptrend on the 50-minute world prior to trading it, right? Something like, for instance, yesterday. Yesterday, we had upside. So any of these dips here, when the moving averages were aligned, was good. Not for many pips. This was consolidation, so forget it. But let's talk about yesterday specifically. You can see that this at least didn't provide a loss. If not, could have provided at least some decent profit. So that particular thing you can watch for today, right? Let the moving averages let it spike up, wait for a hook back, and then a bounce. If you're waiting for more confirmation. The pound dollar. Let's take a look at the 15. Pound dollar is very, very consolidation as well, just like all the currency pairs at the moment. Big consolidations going on. Let's see how long that can last. Usually this is almost looking like summer types of moves, to be honest, in July and August. To me, at least, it looks very, very slow. And it looks more like the month of August to me, but let's see if May can be a bit more, get more movement. Today is the last day of April, by the way, so that's something also to be careful of and keep in mind. And that tomorrow is the first day of the new month, so there could be some closures of positions, maybe to book some profit within this month. The pound dollar had its ups and downs. Yesterday it had an up. The news event sent it down. It didn't take my stop loss. Then it went up, but didn't break the Monday's high, and then it went to the Asian consolidation. So it really was a heartbeat day again, where you had doom, 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 and the open and close were roughly the same. Now we have a clear support line blue, a clear resistance line orange. From a trend line perspective, it would be good to see orange break and H3 break for that upside. That's something that I'm very interested in on the pound dollar. More so than the euro dollar, because the pound dollar didn't have that big fall, or it did during the news event, but the entire structure is looking like a triangle. Whereas if you look at the euro dollar 50-minute chart, you just see a massive fall here and some kind of smaller falling wedge. So there's a bit of a difference. Pound dollar, triangle, euro dollar, lots of downside. Doesn't mean though, as I said, it looks like a good bouncing spot, and it seems to be moving up indeed. Anyone who took it could be maybe up a couple of pips, but that's not so important. This is not a trade idea that would aim for such a small profit. It's just we are seeing that bounce indeed. Pound dollar bouncing too, but if you really want to wait for a trendline break, it will be higher. Price would have to break to higher grounds for that to kick in. We see price though already at the L3, So that could be the bouncing spot for today. Maybe some of you already took that long. Some of you are probably using that Kimberley indicator. If you're not, then you don't have access to it, by all means let me know, and I'll place my email address in the chat. Then you can send me an email and I'll send that Kimberley to you. It's a very useful tool. Maybe some of you took along at L3 with the stop loss below that bottom here. Let's see if that is the bouncing spot. We never know though. L4 short is below basically this trend line, which makes sense. H4 is above yesterday's high and above the trend line, which makes sense too. Anywhere in between could be a lot of bouncing up and down between those resistance lines. I am definitely not sure as yet if this is bullish. It's not that clear. Because if you look at the hourly, yes, Monday we had a big upside, but yesterday we didn't get the break and follow through. So it's back to a neutral position in my opinion. Yesterday it was bullish because of Monday's price action in my opinion. That proved to be half true, but not fully because we didn't get the follow through. Because we didn't get the follow through, it's, in my opinion, has shifted back to a neutral state because of the triangle. That triangle could break to both sides. If it breaks to the upside, it would maybe be a bit more pleasant in the sense that we have a lot of upside momentum prior to that. If you look at the 4-hour chart, yes, we certainly see still remains of a big upside, although it's slowing down now, right, because of the triangle. However, we cannot ignore the fact that price has been quite choppy in this zone. This is starting to look like a rising wedge. Yes, we were already saying yesterday that the fact that Monday's move couldn't break this particular line or confirm that particular line could be already a bit of a warning sign maybe of some struggle. Despite that warning sign, I thought it was still worth an attempt to trade. But now, after yesterday's lack of continuation, I don't think there's any clear winner at the moment. I'm just looking at both trend lines. Whichever breaks could be a decent trade. Obviously, the upside is still, the trend is still up. But due to the rising wedge, due to the divergence, due to the pound being at a very high key level, very key resistance, this divergence pattern as well, a break of support could lead to a bigger retracement or reversal trade to the downside. But it is always a retracement and reversal trade and will always remain so until price fights itself into a downtrend. So we'll have to see which one is the winner, the reversal downside or the trend up continuation. Both have their reasons, both have their legitimate, ideas, support reasons, and I'm open to both. Depending on which type of trades you normally trade, you might want to focus on one of those two. I do like the with the trend continuations normally more though, because they're easier, in my opinion, to trade. Other than that, you can definitely see the moving averages pointed up, and on the daily chart, certainly we can see is this particular trend channel like that, and price still definitely being heavily ingrained on the daily chart in this uptrend. Therefore, the break of blue, the light blue here, could only mean, for instance, a retrace back to this daily support before we get another bounce up. That we have to be aware of. The scope, the level of downside here doesn't have to necessarily mean that we're getting a massive reversal. No, not as yet. We can't assume that. Could be, but we don't know that yet. Because otherwise, all price action is still pointed up. All price action is still bullish, in fact. Alrighty, folks, with that said, let me see if there's any angle that remains to be discussed, but I think otherwise we've gone through the most important things here. Any questions, maybe? Does anyone see it differently or use any lines that you want to share with us on the euro or pound? Pedro is asking, what is the best time for identifying the trend? Well, it depends. It's all a relationship with regard to what you want to trade. There's really no best time frame, I think. It all depends what you can, how many opportunities you want to have in a week or in a month, what you can handle. I mean, what can you really, regarding your time availability, can you really monitor, can you analyze, how much time can you analyze, monitor, and hunt for trades? Because the whole thing is also from a practical point of view, you know, you could have a strategy that works great and has a good system expectancy, but how about if it requires you to enter a chart on the 50-minute world and you do your trade management on that time frame as well? Well, if you have a day job, then that could be very difficult to hunt for and manage, right? So it all depends on what time frame you want to enter. What I would do is whatever time frame you want to enter, go let's say 4 to 6 times that time frame. So if you're entering on a 1-hour chart, I would say use a 4 or 8-hour chart as your trend, for instance. If you're using a 50-minute chart for entering, you could use a 2 to 4-hour trend, for instance. And what time frame you enter would depend on, as I said, your availability and how many opportunities you want to have, and what your psychology wants to trade, what you feel most comfortable with, and those factors. The mix of that will lead to the practical solution for yourself, because we have to find something that suits us both psychologically and practically, in a way, so that we have optimal balance, basically. Let's see. Bob is asking, is the euro more driven by data than technicals currently? Yeah, I would tend to agree. I mean, maybe not easy for me to say so, but it almost seems so indeed. It's difficult to say, but exactly what the balance is in general. But it is so that price is relatively choppy, and if it moves, like the euro dollar yesterday, it was definitely more so when news events are being released, and this whole quantitative easing and the future of the euro zone in combination with the dollar news and the quantitative easing of that, and it's really quite, I think, impacting the market about what can happen in the future. I think now it's quite a tight balance. The ECB is saying that they want to do some quantitative easing. So now, as far as I've read, it's only words, not much action. And the market is reacting to those words. But as soon as the euro dollar dips, the technicals or support steps in. Maybe when the Eurozone, the ECB, back up their words a bit more with actions, then we could see the euro dollar fall, for instance. At the moment, there seems to be still an upslant. If you look at GDP versus the quantity of money, let's say, created, okay, it's actually quite accurate what the euro dollar value is at the moment. The GDP has an upside on the dollar. The euro is quite flat. The U.S. is let's say, creating more liquidity, more money. The eurozone is creating less. So they're quite imbalanced in that regard, and the current price would be quite a fair price if one could even discuss a fair price. If you look at GDP and money printed, because it's about that balance at the end of the day, isn't it? Because basically, if you look at the GDP, that's total economic output, and how much money is created basically is, how much money is there to be divided within that GDP. If you have a bigger GDP, you could also create more money. It would be spread equally thin. If you have a smaller GDP with less created money, right? It's about that ratio. If you create more money than your GDP is growing, then you're basically debasing your currency value in a way. If you're printing less than your GDP is growing, then you're increasing that GDP, the value of that currency. Interest rates basically is just a tool for that, right? So it depends all this about this balance. If the U.S. indeed sooner or later will maybe, depending on the data, which has been quite mixed so far, if the data does pick up, then maybe the quantitative easing will stop with the U.S. and sooner or later maybe even interest rate hikes, maybe 1.5, 2 years from now. If the euro goes in the opposite direction and starts to do more quantitative easing, then eventually the euro dollar could make a substantial drop. That would fit in with the technicals that I'm seeing. If I look at the technicals, I'm seeing upside to 143 and then downside. So maybe that euro dollar could, with all the news event spikes in between, could have that upside still until that level, a slow grinding upside until we get some bigger fall due to these fundamentals that would be supporting it. I don't know. It's a big speculation at the moment. It's a very big time frame we're looking at, so you can imagine it could be difficult to look at that. But in general, what I mean is this is a slow grinding upside, and here we're going to get the 78.6 fib is at 143, so that may be the turning spot. At the moment, though, the volatility of this euro dollar is extremely tight. The range here we see, and it's especially if we zoom in, not much movement, and if it moves, indeed, it does seem to be related to some kind of news event in many cases. Alrighty, let me see. But despite that, I think that in the current environment, with this small of a range, almost the Camarilla seems to be the most valuable indicator at the moment in this type of environment, I would say, because these daily levels are very, very keen, very important at the moment in finding maybe some couple of trades, because within this mess of let's say slow movement, at least during the day there's still some movement that could be capitalized on. And yeah, at the moment we're getting very little follow through. So by aiming for a smaller piece of the pie, the smaller amount of pips, it I think does become a bit easier. Not necessarily news trading, but just aiming for a smaller slice of the pie becomes a bit easier to book profit, because obviously the pie is smaller. So if you aim for lower time frames, it's going to be easier to maybe slice a piece of that, because we're not getting the follow through. So in this type of environment, maybe this Camarilla pivot point indicator has more value than maybe moving averages or a trend line at the moment. Whereas in a trending environment, those tools could be great. Let's see. I do not personally trade on news. No, I don't trade. I'm fully always on technicals. So anyhow, that fundamental analysis is just my my guess. I wouldn't want to claim at all that I have here some profound insight, but this is just in the back of my mind when I look at the weekly chart that something like that could happen. The weekly is in a way looking like a bit of a rising wedge. That rising wedge though doesn't have to end right here, right now. It could continue for a while. Maybe just totally break through this rising wedge to hit that 78.6 and then fall. What could happen though is that this is looking like a rising wedge, and actually you get this tremendous spike up out of the rising wedge. It looks like a break of it. It hits the 786 fib, flies down 200 pips, goes into consolidation, and then flies again down. This process, though, could take months and months. This could be a whole year even. The rising wedge could take forever. Then the sudden spike could be pretty fast. And then this spike could also be relatively fast. And then a big consolidation. And then maybe the continuation. Something that I can already easily picture right now. Oh, sorry, maybe I have... Sorry, I think I accidentally froze my screen. Sorry about that. I'm showing the euro-dollar weekly. So what I was showing here is the rising wedge on the euro-dollar weekly, and the fact that the 78.6 fib is at the 143. Yikes, sorry about that. I was showing you entire analysis here on this weekly chart. And what I was showing here was the fact that maybe you could do this rising wedge like this, pop up, hit the 788.6, and fly down, make consolidation, and then continue down. Something like that, I wouldn't be surprised. Alrighty. Euro pound is back at support. Could be a bouncing spot for euro. The odd USD did get some follow through to the upside, at least something yesterday. So maybe some of you are in that trade still. Got a nice 40 pips. Not a major big movement, but still relatively good good upside here. And the bouncing spot as we expected at the bottom of that uptrend channel on the daily chart. Something like this. So in that regard, price is back at the bottom and is a bouncing spot. That's what we said yesterday. And we had bullish candle here and bullish candles after that. Now we're pretty close to a potential breaking spot again. All right, that breaking spot could be the bull flag that we talked about yesterday. This bull flag right here, something like that could be it. For instance, on the daily chart, let's take a look. Daily candle was a bullish candle with a wick at the bottom, and we broke yesterday's high already, which could mean that we're in a trending mode to the upside. Looking at the hourly, we can see that the momentum moving average is already green and pointed up. So let's take a look at the 15. They too are still green. And we can see an H4 upon the break of that trend line at 92.97. Yeah, so that could be a potential continuation on the odd USD to the upside, right here. You can see that the shorting area is at L4, is below the support trend line, which means that any trade to the downside here is counter trend at the moment. To the upside right here doesn't make sense because we're too close to R1, we're too close to the H3, we're too close to this trend line. Therefore, no longs. Only upon the break of that level, break, pull back and go, for instance, could we say that is an interesting zone. Therefore, no longs because it's filtered out. Therefore, no shorts in my opinion because the momentum is still up. Therefore, no trade at the moment. Kiwi, let's take a look. Kiwi also had upside yesterday. Kiwi bounced at the horizontal support here, moved up to 85.70. And is struggling at that 85.70 level. It's a bit of a mixed picture. Is this because we had such a big downtrend, we broke the blue line, we hooked back to that blue line? I wouldn't be too fond of the Kiwi at the moment. It looks like a potential hook back from more downside, or is this a hook back from upside? I don't know. It really depends on how you look at it. I would be still cautious. We are above support, but we're still below resistance, which means we're caught in between both, which means I'm really not that interested. Dollar CAD, let's take a look. Made a big fall yesterday. As I said, be careful with the 50 fib, 61.8 fib. Those could be bouncing spots. Price is stopping there at the moment. Could be maybe the thing is that we are at support, but in a downtrend, which means which one's going to win? I personally want to see the battle. I want to see who wins that battle before anticipating this particular setup. I don't think it makes sense to anticipate this. Dollar Swissy had some upside yesterday. It's pretty messy on the dollar Swissy. Dollar yen. Let's see. Had an upside yesterday. Then a pretty big downside. Bounce off the L5. But looking at the momentum, is still down momentum on the 50-minute chart. Pound yen also down momentum, bouncing off the L5. Euro yen, approximately the same story, in fact. This is looking like 5 waves to me. And therefore, this is definitely a chance of being a pullback from our upside. And maybe that minus 272 is therefore in target. But I'm not a big fan of the yen in any case. Could be some long potential. If we look at the Camarilla on the L5 with that in mind, hookbacks here could be maybe support for upside. It doesn't seem to be the best idea, but let's see if there's anything better. Maybe to look at the Euro odd. Let's take a look at the 4-hour here. Well, the daily fib, the 38.2 daily fib was hit. With a bearish candle there. Moving averages are totally flat. There's not really a good trend line. There's a trend line that can connect these bottoms, but that's far away from now. There's a trend line that can connect these bottoms maybe. That's a horizontal trend line. I'm not a big fan of this euro odd at the moment. I mean, it made a big fall. It was moving up a lot, so I want to see. I want a bit more info at the moment. The 38.2 fib could be the bouncing spot for major downside, but it also could be just a stalling spot for a retracement up to the 50 fib. That's the thing and the issue that I'm thinking about when looking at this euro odd. From a 50-minute point of view, we are close to this level plus the L3, which means that we could be at a bouncing spot, but we do have a bit of divergence between these bottoms. Could be a bouncing spot here on the euro and on the euro odd. But here too, just like the others, in fact, or some others, is that this isn't a downtrend here. The down momentum definitely in play. Therefore, any upside is counter the momentum on the 15. That's always a bit risky. I would like to see at least these two moving averages, these 21 and 34 EMA, aligned with each other so that I know that the momentum is up. At the moment, if you look at the two moving averages, the 21, 34, they're both reddish, which means they're aligned to the downside. That means the momentum is to the downside. That means there's no guarantee that they will get a bounce right now, right here. It could be later. And that's the advantage of trading with those moving averages. If we would trade with those moving averages, we would be looking for downside. But we have an L3 long right in front of us, and we have the support right close by. Plus, we have hourly engulfing twins. Is that a reason to short? Or is that a reason to avoid shorts? Yes, in my opinion it is. So I would be still cautious with this euro odd. I don't see anything on that one. Pound odd could have a trend line that could be in play here if you connect the tops like this, for instance. Something like that. But that's a pretty steep trend line. You notice? Pretty steep angle. The importance of that is that if it's a steep angle, that means price is moving down pretty fast, right? In this case. If it's moving down fast, then that could be actually a momentum. That makes it a bit more riskier. You want to preferably have a trend line that is not too steep or too flat, in my opinion. Too steep because otherwise you might be when that steep trend line breaks, you might be trading it against the momentum. And unless there's a specific reason to trade it against the momentum, that might not be the best thing. Let's take a look at pound CAD. Dalish is recommending that. There it is. Let's see. L3, L4, wow, it's pretty big spaces on the pound CAD. There was a big struggle yesterday. Eventually, price couldn't break through resistance. And if it can't break through resistance, then there could be reason to expect a break of support, I guess, right? It has to go one way or another at one point in time. And that's what it did. It broke the support, the dollar CAD. Actually, the CAD itself strengthened, and we saw this fall. So it's a down momentum, that's for sure. Is it a downtrend? It's still an uptrend on the daily. It's a mix on the 4-hour, 1 hour, mix too. I'll be cautious. The reason is because if you look at this AO on the hourly, yes, we had a lot of fall to the downside. However, price is retracing now here, like this. And that means we could see this AO go back to the zero line. That means the consolidation could still take some time. Yesterday I had a big daily down day, and very close, very strong close near the low, in fact. Very bearish candle, and therefore, if you look at that candle, I wouldn't expect much of upside today. Maybe some upside to retrace that candle, but otherwise, I would expect eventually some follow-through to the downside. But the thing is that I would probably want to see this go back to the zero line at the moment. Although, if you look at the 30, could be ready for that downside already. Yeah, I don't know. Let's take a look at the dollar CAD. Maybe that will help us a bit. Could be ready. Let's say, from my strategic conservativeness, it might be better to wait for the hourly retracement to finish. Could be less risky. But we can take a look at the dollar CAD and see if that could provide us some more info. Oh, we already looked at the dollar CAD. Yeah, the dollar CAD, as I said, is a bit of a bouncing spot here. So if we look at the pound CAD with that in view, then maybe that bounce could get the pound CAD higher as well, and then we see maybe one more downside here. You see, you never know, because this downside could be all and we get upside. The market loves retracing, but it's just a question of which side is it retracing. That's, of course, the question of definition of trend. That's why if you don't use any trend definition, you could get quite puzzled and confused when trading Forex pretty quickly, because the world will start looking upside down, because you don't have any vision, you don't have any view of what the trend is. If you don't use a trend definition, then things could quickly get quite dizzy, because prices moving up and down in so many fashions and so many forms and so many time frames. It retraces candles, it retraces legs, swing highs, all different time frames. That it's always good to wait for a discount, but eventually you don't know which way you want to trade it. You don't know which way to look at it. And fibs are great, for instance, to give you an example. But if you only use fibs, it can be very confusing which side you want to trade it to, really, because there are fibs everywhere. If you really use fibs intensively, for instance. All right, so I think that this is a case where we're having a bit of something like that, where it's just a mixture. Okay, you know, it depends how you look at it. If you have a daily chart, you look, yes, uptrend, but obviously we're getting some struggle here with breaking these tops, and we broke a support line with quite a lot of momentum, right? So we just have to realize that the uptrend is still in play, and this could be retracement from upside. However, if we do get signs that this upside is ready for one more fall, it could be worth trading as well. All I'm saying is that if there is downside potential, just be careful of the fact that the bigger trend is still up, and we might not get much follow-through to the downside, that's all, or not get any follow-through at all. As long as we're aware of what the trend is and not forget that and keep that out of sight, then everything should be okay. Because once you get too caught up maybe in saying, maybe as I was doing, like, this is downside, there's a good chance of follow-through. Yes, it is true, but we could get ourselves caught in a potential trade that doesn't get followed through because the trend is still up. The only thing is that we're close to resistance and haven't broken resistance as yet. Pound yen is something Bob was asking for. Let's take a look. We are right at L5, interesting. Bouncing off of L5, in fact. Okay, let's take a look what the trend is. The trend on the 4-hour chart is up. Trend on the daily chart is up. Anyone had any doubts, then the fact that the blue moving average is above the green one, and the price is above the shorter term moving averages on the daily chart would confirm the uptrend. Same thing is true for the 4-hour chart. So trend is up. Now we are close to resistance levels. Why? Because we have these two horizontal levels, actually a third one here, plus we have this trend line in play. When zooming into the 4-hour chart and then the hourly, we understand why price was struggling here and couldn't break to the upside. It was too close to support, resistance, and couldn't break to those levels. This is a support line coming in on the daily. Yeah, so there's this triangle in play, although it has a bullish stance to it, it has a bullish angle to it. 4-hour chart is very choppy as well, but most of the time it has more upside. Looking at the orange trend line, it has an angle to the upside. Moving average have an angle to the upside. So this L5 certainly made sense from that perspective to expect a bounce. However, despite the fact that we had the bounce right now, right here, if a trader didn't take it from the bouncing area, we're about halfway again between current price and the pivot and the stop loss placement. So in that regard, from this perspective, it's not that appealing. The break of the pivot plus this trend line would make things different. Break of H3 would make things different, although the H4 is very close by as well, surprisingly, on the pound yen. In fact, very surprisingly, the relatively tight range here. Let's take a look at the hourly, see if we see something different. It's a very tight maneuvering with daily tops so close by. That's not easy. It doesn't look interesting at the moment to me. No. I would probably have to see a break of the top or a bigger pullback. And even if it breaks, yeah, the question is when to enter. That is something that's also not too easy, because when we break that trend line, we got resistance close by as well. So all in all, it's not an easy currency, even if it breaks. If it breaks, for instance, the ideal situation would be if it breaks, give some kind of bull flag, and then continues. Bob is talking about 172.60. Yes, indeed. There could be some small intraday trade maybe to the upside indeed. But pound yen is a relatively tight camarilla. I don't know why, but it is so. So that could be a disadvantage of that. Overall, though, certainly the outlook is looking bullish. The trend is up. The structure is bullish. It's just not an easy structure to trade and enter at the moment without violating some of my rules, like not trying to trade it, not trading it in front of major resistance in an uptrend. The bounce would have been better though. 172 bounce, we had some space. Next level would have to be the pivot indeed. Does anyone else have a question? Good questions today, everyone. Great job. I'm saying great job because I appreciate the inquiries. That way I know that people traders, viewers, you out there are looking with me. That's always good. And I like to discuss things that you might see or wonder. So I have an idea, that I'm saying something that helps you. Yeah, sorry for those that are expecting a bit more trend lines today. I do have to, in a way, admit that there are not many trend lines. I was looking at it yesterday. I really didn't see many trend lines. This pound dollar does certainly have those, though. Euro dollar did retrace a bit here to 138. We'll have to find out if that is a bouncing spot or not. Pound dollar also made a double hit at L3. Let's take a look at XAU USD. Pedro is asking about that. And certainly we'll keep trend lines in mind. Let's take a look. This is what I have on the daily chart at the moment. We had a big downtrend indicated by orange, broke out of orange to the upside, made a deep hook back to double bottom, then broke out of purple, made this blue channel, broke out of the blue channel, bounced to make a purple magenta channel, broke out of the magenta channel. We could adjust these trend lines to do something like this at the moment. That is a pretty tight range. That is a pretty tight triangle. That is one that doesn't have much space between it. We had a very big up day on 24th of April. Let's see, this could be a bouncing spot maybe, but in general, strong up rebound. So far, some downside. If that downside retracement from upside, I would keep an eye on this upper magenta trend line. If this actually is a downside continuation, then I'll keep an eye on this bottom trend line. There's really not much more to add, I would say, regarding trend lines at least. No, this piece is very choppy, so it's difficult to put trend lines on. Right? We want a trend line that has a good angle and has multiple hits and connects, good places, good logical tops and bottoms. And maybe yesterday we had one of it like that. That could have been connecting bottoms, for instance, but let's see. If price managed to get back to the bottom, that could be a bouncing spot. Or if price managed to break, that could be a breaking spot. These three arrows seem to be the most likely or interesting situations for XAU USD. Some other crosses, X and pound, Swissy seem to be making this kind of like correction here. Broke out of that correction. That could be a break, pullback, continuation. Yeah, no problem, Pedro. My pleasure. If anyone else has a preference for a currency, let me know, of course. In the meantime, I'll show you pound Swissy. It looks like it broke out. But all these Swissies, I think, look a bit yucky to me. Pound Swiss, out Swissy, sorry, it was the only one that moved decently, I would say. Odd CAD moved a lot down together with the CADs. Let's take a look at the euro dollar again. Struggling still, pound dollar struggling, not much movement. Odd USD right at the trend line. Not much movement either. Kiwi bouncing a bit, but market, I don't know. It's too soon to tell, but it could be maybe a rough, quiet day with its lot of spikes up and down when the news events are released. But who knows? You don't know. We don't know. But certainly doesn't look so action-packed so far. Although the trading day is very early, obviously. What is your favorite pair at the moment? Because to me, I don't have a favorite at the moment. I don't see anything that really jumps out at me at the moment. I would say odd USD maybe still. No, there's not a lot happening, Bob is saying. And yeah, that makes sense to me too. Dalish is saying euro dollar hold on 138. I don't know. If I had to choose, I guess the Aussie would be something I want to keep an eye on today. Otherwise, maybe the yen, but the CAD and the Swissy, not seemingly interesting. The Kiwi neither. Not a great environment. Let's take a look at 138 euro dollar hold 138. Yeah, that makes sense. That's a good buy. I like that level. It's a good long. It's a relatively, you could have a very relatively tight stop loss there. You have bullish price action. Anyone taking longs here at 138, 137.98, 138.04, I think makes sense because we are at a bouncing spot. I definitely agree with that. That was actually the first trade we discussed today, and probably, in fact, even better than the odd USD. If anything, maybe the euro dollar has the best setup indeed today. Otherwise, there's really not much. Odd USD break of a bull flag. Maybe the pound USD moving up, but that's not the way to go. Maybe dollar yen, euro odd, pound odd, but it depends. NFP usually I don't trade indeed. There's not many times I have positions open. Most of the time I'm out of the market by then. Not always. I mean, if I have a swing trade that really into pretty substantial number of pips, plus I have a trading stop loss that's reasonably distant away from current price, then that could be an exception. But well, keep an eye on the Camarilla throughout the day. That might provide some developments. Take a look. Keep an eye on the moving averages, like these 34 and the 21 EMA, so you know what the momentum is. And you can combine that with the Camarilla, so you have an idea what's going on. You have an idea of key level. You have an idea of momentum, and maybe even add another moving average for the trend, so you have an idea of trend, momentum, and key level, intraday key levels. Let's say. That could really help a lot with identifying potential trades throughout the day, but be careful indeed in general, because it's not a pleasant environment so far. With the big news events like that around the corner, I'm not that convinced that the environment will necessarily change prior to those news events. In fact, I don't think that is a big chance at all. If you have a quiet market, then I don't think it's going to speed up just in front of a FOMC. No, that doesn't seem that likely. So it's going to be probably very choppy today, and that's why Camarilla would be probably the better one, even better than trend lines for today. but this topic was already chosen a while ago, so you never know if it's really useful at that particular day. Tonight we have a webinar with Nennet on Introduction to Expert Advisors, Part 1. Tomorrow we have Live Trading Lab again and a Pro Learning Lab where we take a look at entries and scale-ins. That's together, me and Nennet. So we have one more tonight, the Expert Opinion, then we have live webinar on trading tomorrow morning, and then the usual Thursday evening as well. With that said, I guess I'll wrap it up. I think we've really nothing is left to discuss, so I'll hope to see you tonight with Nennet, and hope to see you here tomorrow again. Thanks for joining me, and wish you all a great trading and a good day. Cheers.